Guys, this is Vinit from Edge-Forex, and I am back from a long hiatus, and I am so excited to be with you guys, and there is so much to talk. So much has been happening over the months, and I want to talk about it all. I want to discuss it with you guys, and I want to get your opinion. So make sure to stick around because there is so much we need to talk about. There is so much that is happening in the marketplace, and if you miss these critical updates, you're gonna miss a lot of opportunities to make some serious money. So here, let's cut through the chase. Let's talk about the elephant in the room. US dollar. It's been taking a beating over the months, down almost 8% this year. Why? We'll talk about that. Is this the end of the dollar? Everybody is saying this is it. Dollar is ended, finished, no more reserve currency, world reserve currency, and it's done and it's over with. It's dead. Is that true? We'll talk about that. And if that is true, what is going to replace it? We'll talk about that too. If it's true, what's the goal? What's gold market doing? Gold's been ripping hot for the entirety of this year. So what are all these things telling us? Trump coming to the office, make America great again, tariff wars. So much to talk over the next few days. It is going to be so exciting. But one thing at a time. First thing I want to talk about is the dollar. Let's see what it looks like. So now we are going to look at the dollar chart. I just want to cut through the chase, guys. Let's talk money. Let's talk what matters the most. Let's talk what trades we can put on for the next foreseeable future in short to mid to long term. Okay, you're looking at, let me make it full screen here. Here we go. So you're looking at the dollar index chart, DXY, where the 56% is weighed in euros, and the rest is like GBP, JPY, Swiss francs, Canadian dollar, Australian dollars, and so forth. All the major currencies and it's weighed again. So again, it's all relative. So it's dollar against all the other major currencies, and it's measured in this index called dollar index, and also people like to call it Dixie. So I may go back and forth between DXY or Dixie. So let's look at the long-term chart. Let's look at the forest for the trees. We're going to drill down into the nitty-gritty of the chart. We're going to drill down what's happening in the last few days, few weeks, few months, and where the opportunities lie. Now, look at the long-term chart. The way I look at the chart is I zoom out. So you're looking at a 20-year chart. So every bar, every candle is representing 1 month. So now we are going back 20 years. If you look at the bottom here, it's 2005 till date, which is 2025. Okay, so now if I look at from left to the right, the trend is very clear and it's up. Okay, there is a channel that the trend is flowing in. So let's draw a trend line here, and let's draw a channel here. So price is very clearly moving in an upward trajectory, and the path is very clear. So if we, again, when in doubt, zoom out. When in doubt, zoom out and look at where things are headed. And a long-term chart will tell you a picture on where things are headed. Anyway, so again, this is just my opinion based on all 20 plus years of market analysis, and it's clear you see where my bias is, where things are headed, because dollar is the world's reserve currency. It's not going to die overnight. It's going to die eventually, and it's going to die in a few years or decade. I don't know how long, when. I cannot see the future. But what I can see is where it's headed in the short to medium term, and it's going a lot higher, in my opinion, and I'm going to make my case. Okay, so if you disagree, please comment, and let's get a debate started. Because right now, 99% of the finance world is saying dollar is doomed. This is the end of it. And that, when the sentiment is that extreme, that means the bottom is either in or nigh. So I think it's in, but I could be wrong. But if it's not in, it's going to be in very soon. Okay, so now the picture that I'm painting here is if a train is going full force at 200 miles an hour for the last 20 years, it's going to take a while to turn around. It's going to take a while to slow down. And I don't see any signs of slowing. If anything, I think it's going to accelerate. I think it's going to go a lot higher, a lot faster, in my opinion. And why? Let's take a look at that also. Let me go back, look at, and let's go look at what the central bank rates are for all the major countries. Let's see. Let's start with the dollar. Okay. So right now, the central bank rate for United States is 4.5%. Let me zoom in a bit more. It is 4.5%. So the last move, 4.25 to 4.5%. And the last fund rate move was 25 basis point lower, which was on 18th of December 2024, about 5 months ago. Okay, so now let's look at Eurozone. So Eurozone, there is no one rate across. Well, there is one rate across. So let's look at the Eurozone. It is 2.25%. Okay, the last move was 25 basis point cut, and it was on 17th of April, as recent as 2 weeks ago. All right, so now looking at 4.25, and we are looking at 2.25. So there is a differential. So there is a difference of 2 percentage points, which is huge when it comes to interest rates. So now it's almost 100% higher in the US, the central bank rate. So everything is driven by central bank rates, which is the deposit rates, the overnight deposit rates, the long-term rates, the short-term rates, everything. The basis is central bank rates. So in the US it's 4.25, and in the Eurozone is 2.25. So there is a 2 percentage point difference, which is massive. So now let's look at inflation. All right, guys. So now if I look at inflation in the United States, it's 2.4%. And in the Eurozone, it is 2.2%. Okay. So now why is that important? It is very important because if I am depositing money in the US, if I put my money to work in the US, I know it is going to grow by at least 2% a year. Okay, so now why am I comparing it with Euro? Because Euro is the biggest part of DXY. And okay, so and Europe, Eurozone is the second biggest economic zone after the United States. So I'm talking about the two big behemoths of the in the globe. So now in the US, there is a positive rate by 2%. So the Fed fund rates is 4.25, inflation is 2.25 approximately. So there is a positive return on your money when you invest in the US by the word go. And don't forget, US is the reserve currency of the world. So now, in the reserve currency of the world, the US, you are already ahead by 2% because in the Eurozone area, your interest rate is 2.25%, and you have inflation also at 2.2%. So net is zero. So where would money go? Where would you rather invest where you're getting 2% interest versus 0% interest? Okay, we're going to invest in the Eurozone where every country has their own fiscal policy, but they're tied with one big monetary policy. So Spain is considered equal to Germany. So the productivity in Spain is considered to be equal to Germany, which makes absolutely no sense. So in my opinion, Euro is going to weaken a lot compared to the US dollar. Number one, money flows where it's treated best. I've been saying that for years, and it's proven me correct every single time. As long as there is a positive interest rate correlation with the US dollar compared to euro or any other currency, money is going to flow out of euro into the US dollar. I don't care about the short-term fluctuations that, hey, yes, I agree. US dollar got burnt, and US dollar index got burnt badly this year. But look at the big picture. I am a big picture guy, and then we would drill in. Okay, so look at the big picture before you make up your mind and say, hey, dollar is doomed. Dollar is nothing. It's not going anywhere. Why? Because of it being the world reserve currency. What does that mean? If India wants to buy oil from Canada, they're not going to buy it in rupees. They're going to sell the rupee, buy the dollar, or use the dollars that they have reserves in, and then use that money to buy oil from Canada. or from Brazil, or from any other country for that matter, or from Saudi Arabia. So all the countries in the world, they have to have certain reserves. Those reserves are in US dollars. All their commerce happens in the US dollars. So now it's not going to change overnight because there is no viable alternative for the US dollar at this present moment. And I don't see one coming anytime soon. It's clearly not Bitcoin, clearly not gold, even though gold has been ripping higher because of different reasons. It's not because of US going dollar going lower. It's because of the tariff wars. It's because of Trump. We'll talk about gold in another video, but right now I want to make sure that my views are absolutely clear that dollar is not going anywhere. If anything, dollar is putting in a major bottom for a very long time to come. So now look at the long-term chart. Okay, it's following a pattern, it's following a path, and I think it's making a bottom here. If not, it's going to make a bottom right at here at around 97, but it's going to touch the trend line here, and then it's going to bounce back really bad, like aggressively. So that's it. Let me clear the drawings. Let's kind of zoom in a little bit. So it's from monthly chart. Let's go to the 4-hour chart. So that'll give us a different picture. So here we go, guys. So we're looking at the 4-hour chart for last couple of months now. So now, left to right is clearly is going low. Clearly, the trend is downwards. Now, that said, I see a formation happening here, forming, or actually it's already formed and it's already proven itself. Again, this is me just looking at the charts for years and years and years. I'm used to looking at these things. And so now if I look at this, okay. So now what I do see is an inverse head and shoulder pattern formed, and is actually going higher. So now it came down here, it got rejected, and boom, it started to move higher and it's broken the neckline. So now I am expecting this to move higher and higher. And what it has also done is broken the short-term trend line. So that's a very bullish looking chart. And look at the RSI. It's nicely going higher and higher. Now, do you see a divergence? I see a divergence. Like, for example, if I look at from here to here, but the price is moving from this is lower. So the price is lower, going lower from this point, say, so 10th of April to, say, 21st of April. It's going low. But RSI is saying that, hey, momentum, I am actually going up. I'm turning around. So that tells me at the time that, hey, the price is about to move higher, and we put in our trades at the trend line break, and boom, we're profitable. Now, it's unfolding in front of our eyes. Okay, it's a very bullish move that I see unfolding in front of our own eyes. Now, it's past its first test that it broke the neckline. Let me get rid of these trend lines. Right. Let me get rid of that. Let me get rid of this too. Okay, so it's broken this neckline. Now the next target is it needs to break this particular point, which is 100.28. So now one is broken and the other is next one needs to break 100.28 and then is going to go a lot higher towards 103. So once it goes to 103, so next, so 100.28 is the immediate, like, needs to break it before the weekend is, before the week is over. And it needs to close above 100.28 for the weekend. So after tomorrow night, it needs to close above 100.28. And if it does that, guys, go all in, because we are doing the same. Okay, so then next one is, let me draw a horizontal line, is right around this area, which is 100.27, which is going to be a minor resistance because there was a major bounce here. So now going up is going to, if there's a support here, then going up is going to become resistance. So the path would become something like here. and then boom, break. Something like this. Again, so that's the past towards 103. Now, 103 is major. See all that price action happening, all that clutter here at 103. So that is going to be a major, major, major inflection point. Let me draw a line around 103, right around this area, 103, 103 and a half. So now once it reaches there, we'll look at the chart again, see how it's unfolding. But as of now, to me, the chances of it going up are 80+% and going down are 20-odd%. I like my odds going higher. So if it breaks 100.2, but we're already in. We're already in as soon as it broke the trend line. And now we're waiting for it to break 100.28. Once it breaks 100.28, we are in a big way. And I recommend you guys go into. So now that said, so that's our short term and to midterm, because long term, if I were to zoom out, so let me clear everything here, remove 7 drawings, and let's go back to monthly chart, okay, guys. All right. So long term, I'm going to draw those trend lines again, and if I follow the path, guys, my long term goal over next year and a half. Oops. Hey, where did my arrow go? Come on. Are you serious? Yeah, there it is. So by end of 2026 or so, or beginning of 2027, or even sooner, I think it's going to happen. It's going to be like more like this, like maybe Jan of 2026 or whatever it is. I think it may even happen sooner. But it is going to 115 to 117 if it follows the same path that it has been for the last 20 years now. So that said, that's my opinion where the dollar is headed. And you guys need to like get out of short-term analysis, get out of the clutter, get out of short-term noise, what's happening on a daily basis, what's Trump coming out and saying. He's an idiot. We all know that. He likes to shake markets. He likes to shake things up. Why? Only he knows. Why he does the way he does things, only he can tell. He can tell. All I can tell is dollar is not going anywhere. All right, let's look at it this way. Even let's talk Trump for a second. So now, if Trump wants to bring all that manufacturing in the United States, so they have to build a lot of those factories. There's nothing there because all the manufacturing had moved out of the U.S. So now the factories have to be built in the U.S. To build those factories, they're going to need raw material. They need to buy raw material. What are they going to need? What are they going to buy that raw material with? Dollars. Okay, guys. So that's demand for dollars in the short term. That's huge amount of demand for dollars. All those goods all the debt that was created to create goods for the U.S. So now the U.S. is no longer going to be buying those goods. So there is going to be shortage of dollars going out of the U.S. But the debts, they need to be repaid. Again, that's a topic for another video. Right now, I wanted to come say hello to you guys. Think that, hey, guys, I'm sorry I was gone for a while. Now I'm back. I'm going to be doing regular updates. But first thing first, I wanted to first address the elephant in the room, which is Dixie. And that is what I did. And you know exactly what my thoughts are. News of dollar's demise are greatly exaggerated, guys. Dollar is not going anywhere. If anything, it's going a lot higher. And it's going to surprise, it's going to shock the markets. It is going to wreak havoc in the forex markets, and that's what we are expecting to happen over the next days, weeks, and months. It's going higher. So I think that's it for now, and I am going to be back with other videos. But I wanted to say hello, guys. I'm back. I'm going to be doing videos on a regular basis. Stay tuned and make sure we start a discussion. Any questions, don't hesitate to ask in the comment section. I am here for you guys. I am here. Let's make some freaking money together.